Hey everyone, I hope you're all doing well out there. This is your January market review. So for those of you that have not watched these videos before, my name is Dan Westfall. I'm a certified financial planner and certified fund specialist. My firm is Client Focused Financial, and I do these reviews each month to give my clients the straightforward information about what's going on in the stock market, the economy, and ultimately how that affects their investment portfolios. So the way that I like to talk about the markets and then use this video is I use a lot of charts and graphs to really depict what's going on in the market and using those charts as talking points. So the first chart that I'll bring up here is just the returns for the S&P 500 since the beginning of the year. We're up for the month of January, we're up about 1.3%. Nice little start for the year. Been a little bit of volatility so far, but nothing of any extreme level. Nice to see that the market starts off on a good footing like this, because typically when stocks start off good, traditionally they end up, or at least statistically, they end up moving higher throughout the rest of the year. So it's a good start to it. Over the last 12 months, which is the chart that I'm showing you right now, this is the returns for the S&P 500, close to 15%. So we've been kind of sitting sideways here roughly for about 3 months now, where markets really haven't moved up a whole lot. They've just kind of been zigzagging back and forth in this relative trading range. So not a bad thing that's happening. It just, market price is kind of taking a little bit of a breather after a really good up year in 2025. So it's a nice sign to see that the market's doing well. Company earnings have also been doing really well. The first chart that I have that I had come across this past month that I thought was interesting to talk about, because there have been a lot of earnings reports that have been released so far, is this chart that I came across that looks at profit forecasts both for this year and for next year, and then also uses the data from previous years to kind of give you an idea of where the market was as far as the earnings throughout the year on a dollar basis. This is for the S&P 500. So the way you can calculate the S&P 500 would be by taking the earnings that you're seeing here and then giving it a multiple, and that's what people are willing, or investors are willing to pay for the price of the S&P 500. So the higher the multiple, the more optimistic people feel, and the more they're willing to pay up for that portion of earnings that they're getting. So that's where markets can become overvalued, or potentially, if they're not paying as much, they can become undervalued. So right now you can see kind of the projections for the year 2026 and then the year 2027. Obviously higher than where it's at in 2026, which is a very good sign that companies are estimated to be higher next year, which next year obviously being 2027. When I looked at that, being just now 2026, looking at 2027, that's not that far away. It's a year out. So the fact that earnings estimates are at that higher point just means that stocks can also move up proportionally, or potentially even more, if investors feel like they're willing to pay more for that prospective earnings there. So definitely a really positive sign with where the market's at right now. One of the most common questions I got when I was doing a lot of reviews in January with people is, where do I see the market moving throughout the year? Which, obviously I go rub the crystal ball so that way I can give everybody a clear picture of where things are moving, which there's nothing directly saying like, oh, well, markets are going to move higher or move lower. Because if there was, then the markets already would be discounting that and it'd be moving in that direction. So I feel like the market and stocks are going to be moving higher, because there's a lot of people that still have cash sitting on the sidelines, which I've talked about for years, and it's still a very big thing. I see it even within the couple hundred households that I work with, where there's a lot of people that are constantly asking, well, I have more money, and they add more money from savings and or CDs, which now those rates have started going down. So that money's looking for a better home, basically to put to work at, which is a great sign for people that are investing in the stock market, because they're going to be pushed into that avenue because they're not making as much on their CDs or high yield savings accounts or money markets. So definitely an optimistic sign for markets moving forward. A little bit of a pessimistic thing I'll bring up here is price of Bitcoin. So that's the next chart I have up right now. This is a chart showing the last year of Bitcoin prices. Just this weekend, Bitcoin is really plummeting. Currently, when I'm looking at this is February the 1st here. It's at 78,000 per coin right now, which dropped a lot here over the weekend from just the very beginning of the weekend, where it was closer to like 87, 88,000. So pretty big drop over the weekend, hitting a little bit of a support level though, going all the way back through March and April of last year. Support level acts like a spot where previous buyers and sellers have been trading a lot, like they were in that time frame, and that'll act as like almost like an artificial floor for the price point of that. So if I look at the next chart here, there's an even bigger floor actually below that, which is in the high 60s, low 70,000 range, which goes all the way back through 2024. I'll draw a line in here to kind of show you where I'm talking about with that, which was at the time a resistance level for Bitcoin, now is going to act like a potential support level if Bitcoin actually drops more. So what that means for my clients that are investing with me is I bought some Bitcoin for portfolios back on November 24th, selling an energy position to at least get a little bit of money, or actually, sorry, not an energy position, but a little bit from technology to add to Bitcoin. And we bought that about 87,000 at the time, so it's below that now. I bought only a portion of that with the idea that if it does continually keep falling, I'd like to buy more somewhere in that high 60s, low $70,000 range. So if we get down to that, don't be surprised if you get a trade confirmation that I've added more to your portfolio. So just kind of heads up on that. Another thing that I've been really monitoring here, I jumped the gun talking about energy a second ago, but energy was a position that I had cut from the portfolio back in September, where I had added more to semiconductor stocks, which has done really, really well since then. Semiconductor stocks since that point on September 15th were up like 30%. Energy, though, had been trading sideways for a pretty significant period of time. So it had this resistance level or ceiling on the position in about like that $47 range, which you can kind of see here. It would go up to that and then it would drop back down closer to like $40. So this is a 1-year chart, and this goes even further back through, if we look at a 5-year chart that I'll pull up here, this goes back even further over time, all the way through 2022, where it hit that 47 mark multiple times. I'm counting 1, 2, 3, 4. It went through it back in 2024 and then fell back through it and again. So at least a half a dozen times over the last 5 years, it tried to get through there and then didn't and ended up failing. So now it actually has gotten through there, that 47 mark, and it looks like it's staying above there. So I'm likely to add that back into the portfolio. I have to really look at what position I want to cut, or at least trim from to add that, because when you have something that has a position or a stock or whatever it is, could be Bitcoin, it could be gold, whatever, where there's this very long period of time where there's all these trades happening where it just doesn't get through a ceiling or a resistance level, and then eventually it does, what that'll act as then is then a floor, so or a support level, where then it'll likely hold above that $48 level. 50 for me was kind of the target I really wanted to see at, but it can really be a position that can take off to the upside. So I'm okay with missing a couple percentage on kind of the first initial move, but I like to be part of it for the longer, the bigger move ultimately, which initially when I cut it from the portfolio, it was to add to semiconductors, which was just breaking out of a trading range, which I'll bring up a chart of that here just to kind of show you, where that was at, which was a relatively shorter trading range because it was only over a couple months, but since that point has gone up, about 30-some% since then. So, definitely well worth it, at the time, and even still kind of fast forwarding forward, even with energy kind of breaking out right now. But I'd like to get some exposure to that if we're going to get a continued upside within energy, because that could be a bigger mover, especially because of things that had happened in Venezuela and potentially more deals and things happening there with energy companies. That might be one of those bigger moves that's happening, or one of the reasons that there's a bigger move happening is because of that. So, but that's what I have for you this month. If you have questions or you want to just get in touch with me, feel free to reach out, call, text, email. Happy to chat with you about your portfolio. If you know people out there that you think would be interested in having a deeper conversation with me about their investments or just kind of overall financial world, I'll be happy to have a deeper conversation with them. Just connect us through a 3-way text, or just give them my number and have them reach out to me. I'll be happy to chat with them a little bit more in depth. But I appreciate you all taking the time to check me out. Until next time.